All right, good evening, Ken at Tortoise Capital Nightly Strategy Podcast for, June 11th, 2022, Saturday night. Um, Ken H makes the clear point. Everything has the same pattern since the whole market did something massive these last 2 days. And so that's the insight that correlations change based on what the market's doing. When the market is strong and going up, then you see differentiation between targets where somebody are trying to pick this target versus that target. So you see things moving at different paces. When the market starts to collapse like it has over the last 2 days, especially when that's 2 days of collapse inside a already weakened market that's in bearish normal, then you see all those correlations begin to converge, and then everything goes down together because money is coming out of the market. It's not trying to search around for a particular local winner. Everything is losing, and so things that used to be diversified now become strongly correlated, which is a killer to the concept of diversification, because most diversification models are based on market conditions when things are differentiating. But in those moments when you need protection the most, a lot of that correlation converges. So that's what we'll end up seeing today. Just a quick look at the sector cycling with the 30-day Z-score. Oops. And you notice everything is rolling over. Energy's rolling over. Materials, finance, the S&P is coming into the station. So this is the beginning of weakness after a short-term goodness. And because everything here is at the zero line, it temporarily came back to normal. And now we're seeing that weakness everywhere, even in energy. But finance and materials, clearly the two strongest. When we look at the comparison between staples and consumer discretionary, we see we're in that period of time where growth, consumer discretionary, was greater than staples. But even that's starting to roll over. Staples were stronger these last 2 days than discretionary, so we'll see if this is the case where staples continues to get better, but discretionary rolls over while the market rolls over. So that's the warning shot right now that correlation could start changing. These next ones go pretty quick. They all have the same pattern, and most of these are successful short-term swings, which paid off well, and have set us up for a critical state broadly in the market. So this is Brazil. This was the collapsing dragon that Ken H got, and I'm thinking you covered here. Am I correct on that? Since that's a Friday and you're holding on to a massive win. 1, 2, 3, 4, 5, 6, 7. So why not lock that in and be flat over the weekend? That's how you do it, because the last time it visited this depth, there was one of those. So if you're holding 7 or 8R, don't hold that over the weekend. because you may experience a gap up and a recovery, and then you're cutting away at this hard-earned money. So instead, enjoy the 8R, frame the trade so that it's ready for a breakout in either direction from a zero state, and start directionally neutral. Now, there's every reason to believe that there could be a big collapse. There's still plenty of room to the downside. I mean, the market is only right here. Oh, I'm sorry, the market is 30.53. Yeah, so right in here. So there's this much room to go in either direction. So there's plenty of time to take advantage of that. There's no reason to carry overnight risk. So that's nice. That's really nice work right there. XOM, even XOM in the energy sector, which has been on just a flat tear. Here's Ken H's caught a 2 and actually an emerging dragon once he gets out of this crap. He gets this with a tight wrist box. Caught a 2. Well played to capture both of those moves. Avoids that downward move and is now postured for a nice breakout. So when even the energy sector is suffering, that tells you that these are abnormal times. So this is ready for a recovery or a breakdown to the next level and the next level. So what a comfortable feeling not to have overnight risk over the weekend and to be fresh in the morning. Alcoa, same thing. Here was that congestion of the last couple days, or the last week. And then the supported fall crossing, leading to there was a potential for a collapsing dragon, second position. He's just got 1 on there. And then covers for the same reason he covered Brazil. And this is 1 unit of risk. So 1, 2, 3, 4, 5, 6, and no overnight risk, and postured ready for a strong move in either direction. Because you can be sure that in Washington there are people talking about a buying program to save the market. And that could feature some heavy index buying, which will feature a nice gap up Monday morning. All right, here's the Qs, same thing. On this one, he gets the swing trade on the supported fall crossing. Had a wide stop. Still in the trade when this collapse happens. Gets the trade. Frames a zero state trade ready to recover or collapse further. Nice work. This is peak. This is one that came out of, this is the last one. This came out of our sniper framing. And when this last little support level, here's a congestion zone, fair value, everybody's happy. Big collapse, and they put in a lot of work to establish this support level. And when that collapses, this leg down is as big as this leg down. And that's what that looks like. You saw us trading this one Thursday and Friday on the sniper trade. For the intraday moves on this were just massively good. And now the gap down and support level that's in here sets up a nice frame on the 65-minute or the hourly chart. Again, recovery or further collapse. The nice thing about peak is that nobody cares about them. It's a healthcare facility REIT. So there's no power brokers that are out there saying, what can we do to save peak? So it's really open to the vulnerability that's coming from the markets right now. But it's an S&P 500 stock, so it has quite a lot of liquidity. So it has a lot of advantages as a target. So this one also, no overnight risk, ready to rock in either direction. This is absolutely a Godzilla pattern. Strong move in either direction indicated. All right, that's everything we got for today. We'll get this published and posted. Tomorrow At 10 a.m. Central Time is the opening session of the creativity course for the Eurozone guys. And then Monday night at 7 p.m. will be for the U.S. guys. And that'll be session 0. Should be a lot of fun. All right, that's everything I got for us, and I'll get this published and posted, and we'll see you tomorrow.